So this is part one of our hidden in plain sight, how fraud happens in QuickBooks. My name is Sean Daughton. I am a CPA and also a certified fraud examiner. I've been a partner at Danable for about 10 years. I've been in public accounting for almost 30, which I hate to say. And so over the last few years, it's really become more prevalent that we're finding a lot of fraud in small businesses. And a lot of the small businesses have been using QuickBooks. So it came very clear to us that we should be doing a webinar to try to assist controllers, CFOs, and owners of some potential things that they should be doing in their business on a day-to-day business. So co-presenting with me is Christine Petrone. She's the Director of Accounting and Audit Advisory Services. She's also a QuickBook Pro advisor and a certified public bookkeeper, and very soon to be a certified fraud examiner. Fingers crossed, it'll be very soon. So on any of my frauds, and we're going to talk about some of my more prevalent cases I've had lately, I've brought Christine and her team in for every one. I've used QuickBooks for 30 years, as I've said, or for however long it's been out. But I am not an expert at QuickBooks, as I would anticipate most of you are not as well. So Christine is an expert at QuickBooks, and she's going to give us some great tools, setups specifically that you guys should be using, and what happens if you don't have those setups. That's going to be more in part two. So we're going to give you a foundation in part one. Yeah. Any questions? Anything you want to add?
No.
Okay. So learning objectives. So we're going to talk about warning signs and red flags of fraudulent activity, some common fraud schemes facilitated through QuickBooks specifically, how employees exploit the system features and weaknesses. That's going to be extremely, I'm trying to think of the word I want to use, but you're going to be very surprised at what's happening.
Yes.
Again, you're as an owner focused on what you do well and not necessarily the accounting side, where your bookkeepers, your AR clerks have nothing to do but figure out what you're not looking at on a day-to-day basis and how they could exploit the system if they wanted. And then something that is really amazing. So again, key reports that can reveal potential fraud. There's an amazing report that Christine and her team use all the time, and we use it now specifically for us to help identify fraud. Okay, so we're going to give you some basics now. So what is fraud? So the definition is wrongful or criminal deception intended to result in financial or personal gain. So when does fraud become a crime? It's when it's a knowing misrepresentation of the truth or concealment of a material fact to induce others to act on his or her detriment. So in other words, if you lie in order to deprive a person or organization of their money or property, you're committing fraud. A great example I love to give, and it's great that this is happening in July, is everybody's going to be going back to school beginning of September. We sort of joke in our partner group that our supply expense in the month of August goes up dramatically. So do some of our 150 employees help themselves to pens, paper, folders? We're not sure, but that would seem what's happening. And in each business, fraud always happens. You have to determine what level of fraud you're acceptable with. You know, for me, I believe people using the website to order personal products, to plan weddings during the day while I'm paying them is also fraud. But there's some sort of level that you have to accept. Here's polling question number one. Please make sure you answer it. You'll have 45 seconds. So what % of employees could become perpetrators of fraud if the situation was right?
Would you remind them to answer through conference?
And remember to answer through Conference IO. 25 more seconds to answer. And again, remember you have to answer at least 3 of the 4 to get credit. And if you have any issues, please put it in the chat. And I'm excited for everybody to see the answer to this because it's pretty exciting.
Me too.
Okay, 20% seems to be prevalent, 20%, 1 at 5%, 7%, 10%, and 37% at 80. We ready for the answer? It's the 10-80-10 rule. So 10% of all your employees will never commit a fraud regardless of the situation. So no matter what happens, you leave $100 under the desk, that employee will never touch that $100. 80%, which was the answer we were looking for, of employees could become perpetrators if the situation was right. Did someone else accidentally drop the 100? No one else saw it. That situation was right. 80% potentially would put that in their pocket, not say anything. Then the more shocking one is 10% of employees are basically dishonest and would steal if they got the chance. So no matter what, they're going to steal. So that's where we're going to talk about making sure we have really good internal controls, because as someone who employs 150 people in our firm, that's potentially 15 people of my employees that would steal if they got the chance. So we want to make sure we have controls in place that don't allow them to do that. So if anyone's attended any of our CEs on fraud, you'll see this all the time. It's the fraud triangle. It's really amazing. And every single fraud I've done, I could run through this. And I think we did a CE, I think maybe 4 or 5 years ago, where we actually used the fraud triangle and went through maybe 10 of the top fraud cases throughout the country and broke it down by each one of these. So there's opportunity, financial pressure, and rationalization. So opportunity, what is that? Internal controls. None in place, not enforced, not monitored, not effective, no segregation of duties, and too much trust. So what we see, especially in the smaller businesses, in the smaller non-for-profits, is you don't have a robust accounting department. You have a few people that are making your business or your organization run on a day-to-day business. So it's hard to have a CFO and a controller and an AR clerk and have those segregations of duties in place. So that's where you need to have really good internal controls. I have a client who has a controller who handles payroll, AR, the bank reconciliations. When I met with the owners of the company, my question was simple: who's looking at the bank statements? And the response to me was that they don't have time, which is mind-blowing that this is still happening in 2025, that people don't have time. There's phone apps, everybody's looking at their phone. It takes 2 minutes to open your bank app and look at the activity that cleared the night before. Click on a check, make sure it's a signature that you recognize, make sure it's a payee you recognize. If there's any ACHs, make sure those are what you would expect to have happen. So to say you don't have time is, in my mind, not accurate. Because if you've ever been involved in a fraud on the back end, the time that it's going to take is 150-fold compared to what it would take on a daily basis.
I just wanted a quick comment on the internal controls. So we will go over proper internal controls in more detail in part 2. So hopefully all of you that are on today are going to attend part 2. But, as Sean mentioned, internal controls is one of the biggest issues we see in a lot of our small business clients, and no segregation of duties. Even just the slightest bit of segregation of duties, we will tell you options of how you can incorporate that, even if, like Sean said, you have a small amount of employees in the finance department. So there are ways, and make sure you attend part 2 so that we can go over those.
Yeah, and an example I used to give to one of my larger clients was, we always like to have bank statements mailed to the owner's houses, but nowadays everything's online. What I told them to do is really just print a transaction, print a check off the line every 3-4 months and hand it to their person in charge, if it's the CFO, if it's the controller, and say, hey, I was looking at this, I don't remember, could you pull me the detail? Even if you remember, because now that person has no idea. They assume you're looking at every transaction every day. They don't know what you're looking at. So that keeps them on their toes. It's a great procedure. It takes no time. And then the last one, and every single fraud case I've been involved in, every single one, I hear repeatedly, I can't believe they did that to me. I really trusted them. We're going to talk about a case that is almost finished currently, and that was what they had said. I can't believe it. And that's probably more devastating to the owners than the actual embezzlement itself, that they just lost someone who they thought was a family member, a friend for the last 20 years. And that's really taxing on people. So the financial pressure, right? Everybody has these. So everybody's got some debt. Everybody wants more with the current, everybody sees everybody living a better life on Instagram and TikTok and wants that type of lifestyle. Life pressures, kids going to college, illicit activities and vices, gambling and drugs. I would bet you, I'm going to say 50%, but it could be as high as 75% of the fraud cases I've done over the last 3 years have involved some form of gambling as well. So something to watch. Rationalization. We all do it. I do it at the partner level. Everybody feels they don't get paid what they're worth, right? That's how you rationalize. It's taking the money. Everybody else is doing it. Well, everybody's taking petty cash to buy lunch. Why shouldn't I get to do that? Everybody else is taking the supplies out of the supply closets. Why should I go out and buy pens and paper for my kids when everybody else is taking it? And you know what? I'm not happy with my boss. They deserve to lose money. Look at the new car they're buying. They can afford to do that. And I intend to pay it back is typically how the frauds start, right? There could be a financial pressure. I'm only going to steal $100. I need it to clear the check. I need it to pay child support, whatever that is. But when Friday comes, I'm going to pay it back. What they find is it's easy to not have to pay it back. No one caught $100. In part two, my greatest story that we're going to go through is this exactly, and it really encompasses both parts together. It started out with I intended to pay it back, and it worked out to be about $9 million. So from I intend to pay it back to a $9 million fraud scheme done by one person, and nobody will miss the money. Here's polling question 2, again, 45 seconds. So what is one of the 6 most common behavioral red flags? Your options are gossiping among colleagues, excessive control issues, laughter and joking around, or negative attitudes towards work. Yeah. Anyone having any issues in the chat that we've seen? No? Good. Because again, we hope you like this new program. So again, any issues, please put that on the evaluation form so we can make this a better experience for everyone. Okay, about 5 seconds left. Excessive control issues and negative attitudes towards work. I like them both. So here are the 6 most common behavioral red flags. And we call these red flags because they're things that people should be alert to. So the answer is going to be number 4, excessive control issues. But let's go through these in order. Number 1, living beyond means. So buying or doing things that are inconsistent with their known income. One of the things we do for new staff coming in that are on the audit side is we teach them these things. We teach them to go talk to the CFO, go talk to the controller. And in having those conversations, if you are alert enough, you're going to find out if people are living beyond their means. You're going to be able to tell if the controller who's making $60,000 a year is wearing I don't know, $4,000 Prada shoes or driving, $150,000 BMW. Doesn't mean they're doing anything, but it's a red flag that would raise our risk level to want to do a little bit more work because it would seem unusual that someone in that salary range could afford those situations. Now, again, they certainly could. They could have inheritance, their spouse or partner could, be making more money. It's just something that helps bring to light, hey, I should maybe think about this a little more. Financial difficulties. I hear it from family and friends all the time, right? Complaining about finances, having a sick family member. If you're attuned to these type of things, that's a red flag, right? That's going to give them the pressure to need to commit fraud. Usually a close association with a vendor or a customer. Definitely a conflict of interest or collusion. The issue as a business owner, if you have someone who is, best friends now with a vendor, they may be willing to pay extra to that vendor because their vendor's taking them on a trip.
I think someone has a question.
Different things like that. While we're pulling up our question, we'll go to excessive control issues, unwilling to share duties or delegate tasks. So what we would assume is an amazing thing as a business owner, myself, are the employees who never call in sick. They always handle everything. They never want to let it go because only they can do it the best. That's a red flag, though. If you're unwilling to share duties, so banks still require a 2-week vacation for their tellers. There's a reason for that, so they can get in, audit all the work that they've done for the last year. And typically, we're going to find in one of our real life case studies, that's how this happened. The person ended up being sick, and that's how they got caught because they weren't able to be at work to control the fraud that was happening.
In one of the cases that I helped with a couple years ago, the person who was caught stealing refused to let anybody else go to the bank. So he was the only person that could make a deposit slip and bring it to the bank. And he never went on vacation. And if he did, no one else could go to the bank while he was gone.
That's great too.
So the question is this, we have a couple of people who are logged into a different session of this, so they're not seeing the polling questions to answer. So I need them to check out of the one that they're at and then.
Okay. I don't know if everyone can hear Jen, who's the director of our marketing department. So some people are having an issue where they can't see the polling questions. So what she is telling us is that you need to log out.
And then log it, check out.
Check out.
And then if they go to DM.
And then if you go to DM CPAS.CNF.
And
Charlie
Nancy Frank.
CNF, Charlie Nancy Frank.
.io.
.io.
Tell them that link's in the chat.
That link's right in the chat.
And they can check back in again.
And you can check back in and you should be able to answer the questions.
We apologize for that.
And we definitely apologize. So for anyone who was not seeing the polling questions, please make sure you email us after the presentation to let us know, and we will do everything we can to make sure you're getting the CPE credit and get those answered. Not an issue. Again, this is our first time doing this new platform. We have tested it dramatically, but you just never know what you're going to get. So behavioral changes is our number 5. People are irritable, increased aggression, suspicious or defensive. Huge red flag, a general wheeler dealer attitude, exhibits consistently cunning or an ethical approach to business dealings. And we all know those types of people. Let me click on slide 2.
All right, so now we're gonna get into some of the various types of fraud and how they're committed in QuickBooks. Some of the types we're gonna go over are vendor fraud, payroll fraud, bank reconciliation fraud, and accounts receivable fraud. So the first one we're gonna go over is vendor fraud. Fraud involving phony vendors is a significant issue, with studies indicating that companies lose 5% of their revenue due to vendor fraud. Additionally, 46% of reported fraud cases involve imposter scams, which likely include fraudulent activities related to fake vendors. As an example, if your company has an annual revenue of 1 million and had vendor fraud, you could expect to have an average of $50,000 embezzled. And as Sean mentioned earlier in part 2, he will discuss one of the more extreme fraud cases he had with an example of over 8.6 million embezzled in 3 years.
It's not a bad paycheck.
All right, so one of the issues with vendor fraud is duplicate vendors. So this is one of the flaws of QuickBooks, where it's not going to recognize a vendor as a duplicate vendor depending on how it's typed in. So it's only going to recognize the vendors the same if every single character is typed in the exact way. So here's an example. QuickBooks considers these as two different vendors. So if you look at them closely, you'll see the first one says Danable and McKee LLP without a comma. And the second one, the only difference is that it has a comma after McKee. So QuickBooks is going to let you enter both of these vendors into QuickBooks. Another thing that we see a lot with clients is some people like to use the cat blocks. And so you could even have a third vendor if you typed Danable and McKee with all caps instead of lowercase. So just a little example of how this could, create fraud is if DM is normally paid via ACH, your AP clerk could potentially pay the duplicate vendor using his or her own bank account. So maybe you're issuing Danable and McKee's invoices as ACH payment through our website, and they enter it using the top vendor name, and then they enter the bottom vendor name and are transferring the money to their own bank account. If you're just looking at this quickly, you're not going to notice that they're potentially two separate vendors. So something really important to think about with QuickBooks is, maybe regularly reviewing your vendor list to make sure you don't have any duplicates.
And the way they're gonna catch this is opening your bank app on your phone and looking, because when you look at the QuickBooks reports that Christine's gonna show us, you're gonna see Danable and McKee. You're gonna think that's accounting services for $5,000. If you open your bank statement, it was an ACH payment, you're gonna see that it was not paid to Danable and McKee, that it was paid to Controller Smith for $5,000. So that's why we're trying to drive that home. Take the 2 minutes every morning when you're getting ready to do this.
So the other area that we see fraud in vendors is fictitious vendors. So this happens a lot, and like Sean was saying, when you have that trust with an employee and maybe they're the person that's bringing in new vendors and entering them into QuickBooks and submitting the payment for approval, they could have put in a vendor that didn't have a credit check or have any research done on it. And that vendor could really be a company that they created on the side. So an AP clerk could be paying what looks like a regular vendor, but is in fact a check being deposited into a bank account of a company they created. So it could, have a regular name with LLC after it. And, if you're just reviewing that quickly, or you don't have a process to review new vendors, you wouldn't know that that's a fake company, and you just think that you're purchasing supplies or, something that you regularly buy, and it's really a company that one of your clerks created.
Yeah, one of the things we would never recommend is the AP person having access to adding new vendors. Is there a way in QuickBooks that they could be prevented?
Yep, so when we go into part 2, we'll go over user roles and how you can restrict different people from having specific access.
Yeah, and again, these are all small businesses with, 2 or 3 people, maybe in the accounting department. But, for anybody who's an owner or an executive director out there listening, it's really good to make sure that these setups that we're going to talk about in part 2 are done. Again, it's a great security feature.
We have a quick question before we get into the real world examples. So someone asked, wouldn't a vendor who did not get paid ultimately send notices of open account balances? Yes. I would definitely think that they would notify you. But one of the issues could be that maybe your AP clerk is paying those vendors, but then they're also paying a fake vendor, or with the Danable and McKee example, using a similar looking vendor with one little difference that then they're paying themselves.
Correct. And what we talked about earlier with the employees, they have all day long to think about what the owners are doing. So, for example, if you were paying Danable and you paid our original invoice of 3,000, then you paid yourself 5,000, you would have 8,000 sitting in legal and professional. That might be a red flag to the owner or the management team that was looking at legal and professional. But let's just say the owner is concerned about marketing, about getting new customers out there, and they don't look at the financials. And I can tell you, you'd be stunned how many clients do not look at their internal financials. And this person's going to know this, so they're not going to care if they post it to legal and professional. But if they know you're looking at that, I won't tell you the ways, but there's other ways to hide that additional 5,000 that's going to fly under the radar. Again, if they want to take the money, they certainly are going to do that. Good question. So here is a real world example that our firm has handled. So it was a company in Northern New York, and we're trying not to give a lot of information on the specific companies, but it was an interesting case involving a fictitious vendor. So the person was not in the accounting department, they're actually the warehouse manager. So they were responsible for receiving and shipping of the products that this company made. Employee had been there for over 20 years, knew everybody like you would if you had 20-year history, very respected, close family style environment that the company had. So what did he do? He started creating a fake vendor for packing supplies. He would say they received in $3,000 worth of cardboard. He would have a receiving report. He would have an invoice that he would generate, and he would give that to his friends in payables and accounting, who would then cut a check. And he was like, I know them, it's Sean, I'll drop the check off on my way home. So that's what he started to do, and he kept the amounts really small. It got to the point where this company actually started budgeting in these packing supplies that never existed. The company started budgeting in the fraud, so it didn't even come on anyone's radar. What happened was this was the employee that ended up being sick for a week. The check was cut by the AP clerk, and the CFO was like, well, why aren't we mailing this out? Well, Sean always drops it off to his friend's house. That was a red flag to the CFO, who was unaware this was happening. They started looking into it. And when we were involved, the fraud was over $2.8 million over a 3 or 4 year period. So what started out small turned into a huge amount of money that was taken. Here's our polling question number 3. How often do you review payroll records against how it's recorded in QuickBooks? Once a year, monthly, never, weekly? And I'm hoping for anyone who uses an external payroll company has a great template downloaded and is posting all their payroll automatically. If you don't, please send us a note afterwards, and we'll have Christine get back to you. You know, hopefully everyone's doing as much as they can automated in QuickBooks. Again, I was not an expert at this. I work with Christine so much that she's now helping one of my clients who used to be 8 months behind in posting, who is now current. So once a year, monthly, never, and weekly. So monthly seems to be the big one, and that could be because it's owners and CFOs who would be looking at that monthly. What would you recommend?
I would recommend whatever your payroll processing is. So if it's bi-weekly, you should be recording it bi-weekly. If it's weekly, you should be recording it weekly. I think it's very rare that there is monthly payroll, but like Sean said, if it's owners related, you know, I have seen a couple clients who do pay them monthly, so then that's okay, but definitely, you know, with the consistency of when it's processed.
Yeah, one of the things we like to do in our firm on audit review and comps is something called the 941 rec. So we actually reconcile the payroll expense in your GL to the actual 940s or 941s that are being submitted, just to make sure there's some reasonable expenses going on, because we have had some significant issues in the past with certain clients where fraud was happening in the payroll tax side. So payroll fraud.
Yep, so recording entries to look like payroll expenses. So one of the issues that we see a lot with some small businesses is that they are recording payroll based off of the net that comes out of their bank account. And if you do that, and then you're trying to review the general ledger, there could be a lot of entries and it can kind of look a little bit messy because you really need to be capturing your gross wages every pay period. So payroll should be recorded via a journal entry. As Sean said, some of the more popular payroll companies have an option where you can link it to QuickBooks and set up the different general ledger accounts dependent on, how you want to see the reporting in QuickBooks, and they can automatically download into QuickBooks. I deal a lot with nonprofit entities, so that doesn't really work for them with tracking grants and grant accounting. So what my department has done is created a specific spreadsheet that essentially allows you to enter some of the information into it, and it populates a journal entry. And then in QuickBooks, you can create a recurring journal entry to record that payroll. So ideally, you'd want to be recording payroll via a journal entry. And then say you were reviewing the general ledger, you would only see a journal entry per pay period. So if you were to look and you saw all these other transactions, whether it be additional journal entries or an expense, this could be a red flag that something is happening in the payroll. So an employee with access to the bank could be withdrawing cash and recording it in QuickBooks via a journal entry as wages. So it's just important to kind of understand how you're processing your payroll, making sure it's recorded properly, so that then when you're reviewing it, those types of things would stick out very easily to you.
So one of my latest forensic jobs involved payroll specifically. So it was a company based in central New York. The employee was an office manager responsible for 3 locations. They actually did not have a controller or a CFO. This person sort of handled it all with an outside bookkeeper. So the company had a weekly payroll that was returned for NSF and had to put money into the bank. So what happens if you bounce payroll? The payroll company, if it's an ADP or paychecks, will make you send certified funds to cover that week's payroll. And then depending on what happens, they may pull payroll out a day early before it gets ACH'd out to your employees. They may make you send certified funds for a few weeks. So in this particular case, nothing happened. They sent the certified funds, covered that week's payroll, and everything went hunky-dory after that. So what happened was the office manager started to take cash withdrawals from the various bank tellers, and sometimes multiple ones in one day. So this person was well known by the bank tellers. They would write a check out for cash and put in the memo for payroll. And told the bookkeeper, who was an outside CPA and tax preparer for this company, that they bounced payroll, their employees no longer trusted payroll, and they all wanted to be paid in cash. Well, the problem was there was never an issue with payroll, and the bookkeeper could have seen the cash coming out on a weekly basis for the payroll that was being processed out of all 3 bank accounts. My question to that person was, where are the 1099s if they're being paid in cash and they weren't part of payroll? There should have been a 1099. There should have been some support that supported that person being paid in cash. Again, no company would do that. For any of the owners that are out there, CFOs, this is just bizarre. But this was an accepted answer to the outside bookkeeper, tax preparer, and also to the owners. The owner who was responsible for reviewing the daily bank recs was having some family health issues that was pretty significant, and was not able to keep their eye on the business at that time. And this office manager was well aware of this, and Ultimately, I think currently we're over $600,000 in cash withdrawals and some small use of the company credit card. But, I mean, that was a big number. It was, again, the owners obviously cared about the money. But they were just devastated, during the testifying phase that they just felt duped, they felt stupid, they felt like they did so much wrong that they should have caught this. And to them, that was more devastating than the cash. And again, had they had better procedures in place, could have prevented a lot of this.
Great, we have one more quick question about your previous story.
Okay.
Budget process controls generally are terrible at most companies. They should be more robust. What was the size of the example company in terms of annual revenue?
So the annual revenue was in the 40 to $50 million range, and I don't know specifically their budgeting. All I know is the multiple owners of the company had stated after the fact that the fraud was so prevalent and had gotten to a level that was so significant that it became a line item in their budget. Hopefully that answers it. Creating
This was you.
Okay, so creating fictitious transactions, so monthly bank reconciliation should be completed timely. I'm a huge fan of daily bank recs. I require people in our firms to do them. It's not necessarily every day, but it's every few days they are getting the bank reconciliations done. It's super simple. Most small businesses don't have 100,000 transactions going through. There's probably 10 to 20 transactions. It takes no time for them to do a bank reconciliation. It's a great internal control procedure to have them send you the statement from the bank and the bank reconciliation. And then you can look at any outstanding checks, deposits in transit, bank errors. We have another fraud seminar coming up in early November with Caitlin Axenfeld, who is another partner of mine, who is also a CFE. And she's going to be working with a bank representative to specifically talk about bank fraud, all the scamming and phishing that's going on. So, if it hits your bank, it hits it and it hits it quick. A brand new client we just picked up had 1.2 million in a phishing scam last year, and it takes seconds. You're never going to recover that money. Accounts receivable fraud. This is not as prevalent, at least in my experience, but it does exist. So falsifying records to hide fraud, cash or check payments are typically received from customers. Payments should be applied against open invoices immediately. Payments should be deposited into the bank. Again, remote check captures, a great way to do it if your bank offers it. And then all the support should always be maintained. What I will advise you of that we're seeing more from an external standpoint is the fraudsters are getting a hold of your email and your servers. And what they're actually doing is going in and taking your AR agings and sending out invoices to customers that they now need to pay it online. They've created fake websites. You need to ACH to this location. And that's another way they're getting it. And again, that's going to be talked about in our November fraud. We're almost running out of time already, so we could go on and on for hours. There's so much. Here's our polling question, the last one. What's an example of a report that can be used in QuickBooks Online to detect fraud? A vendor phone list, a trial balance, an AR aging report, or an open PO list? I don't know the answer to this either.
You don't?
I don't. I'll take a guess when it goes to 0. I think I know.
You know.
Okay, down to 5 seconds. I don't want to say it out loud and be wrong. That'd be awful.
All right, that's good.
AR aging report is overly,
AR aging report is the answer, but the PO, the open PO list could be an option, because if you really utilize that feature in QuickBooks Online and you're regularly looking at that, you know, if there's outstanding POs that you know should be closed, that definitely could help. So now we're gonna go over some of the key reports to detect fraud in QuickBooks. Accounts receivable aging detail, accounts payable aging detail, the check detail report, the deposit detail report, a journal entry report, and our favorite, the audit log. So first, I just wanted to go over quickly how to access the reports in QuickBooks. So on the left-hand navigation bar, you'd select the Reports tab, and then you can check Standard Reports. And then that'll bring you to another window where you could scroll down, and it's kind of listed in different sections, like who owes you, who do you owe? It has a section for my accountant reports. But you can also use the top search bar to start typing in any of the reports you're looking for. So if you start typing in accounts receivable, the two options will pop up, and then you can click on the one that you're looking for. So the first one we're going to go over is the accounts receivable aging detail. So this report will provide invoices outstanding to date, any open balances on invoices, and any improperly applied payments. So here's an example of what an AR aging detail report looks like. So as you can see, it shows you the date. So that would be the date that you invoiced your customer. It would show your invoice number, who you invoiced, the due date, and then the amount column is the amount that you invoiced your customer for, and then the open balance would show what they owe. So if they had made a partial payment, you'd have your total amount and then the open balance that they still owe you for. And one thing to point out is the transaction type, which is the second column. You'll notice that all of them say invoice. So you don't want to see really anything in this report other than an invoice. You don't want to see journal entries. If you see a payment type, that could show you that you received a payment from a customer and it was improperly applied against an invoice. It could help you pick out potential fraud. Keeping an eye on this report regularly to make sure that you don't have any outstanding invoices that continuously sit on this report. You know, then you could be reaching out to your customer or talking to your finance department about, you know, why this customer hasn't paid. So this is an important report to kind of be checking regularly. Our next report is the accounts payable aging detail. And this report will show you outstanding bills to date and any improperly applied bill payments. So very similar to our AR aging detail report, it's going to show you the date of your invoice when you received it. The transaction type is a bill. You'll see the vendor that you owe, the due date. It'll show you how many days past due, and the report will kind of separate out current 1 to 30 days, 60 to 90, over 90. The amount you owe, and then the open balance. So if you were to have partially paid a bill, it would show you the balance left to paid. And again, same as AR aging, you don't want to see anything other than a bill transaction type in here. So you don't want to see journal entries, and you don't want to see credit memos. You know, hopefully the credit memo was applied to the proper bill, or the bill that you wanted to apply that to before you paid it. And keeping an eye on, you know, these creeping up and being very old would kind of be a red flag as to, you know, why wasn't this bill paid? And like someone put in the question, why didn't the vendor reach out and say that we didn't pay them? So this is also a very important report to look at. Okay, the next report is your check detail report. And this report will provide the vendor name, the check number, the date the check was written, and important, whether the check has cleared the bank or not.
and if I could just jump in, because this is a part that I use all the time on fraud. QuickBooks downfall is you can put Danable and McKee in or you'd initially do the check to Sean for $5,000, and then you can go back into QuickBooks and you can correct that vendor. They make it easy for small businesses who don't know accounting to make corrections. But what's happened is I printed out a check to myself for $5,000 with my name on it. But if you're to look at the check detail report here, you're gonna see that it's made out to Danable and McKee for $5,000. So this report here would not provide that. But there is another report that Christine got me on it. I don't want to spoil your secrets, but that's a great report.
All right, so in this report, you're gonna see the date that the check was written. It'll show you that it was a bill payment, and all of these reports are customizable and you can filter. So, you know, maybe you don't want to see all the checks and the expenses and the bill payment checks. You could filter it to just show bill payments or just show checks. So there's a few options to pay bills out of QuickBooks. You know, you can enter the bill and do the bill payment route, or you could just actually record a check or an expense to hit your check register. So the initial report will show all of them on here. A check number if it's a check, the vendor name, and then again, super important if it's cleared or not. So, you know, you could review this monthly or, you know, every month have them show year to date, and then you'll be able to see if things change or if it hasn't cleared or not, which could be a red flag as to why it hasn't cleared. The next report is the deposit detail. So this report will provide date of deposit, customers applied payments, amount of total deposit, and if it has been cleared the bank or not. So very similar to the check detail, it's going to show you the date of the deposit. You can see the payments, which would be if you receive the payment against an invoice. But some people also utilize sales receipts, so you can see that on here as well. Who the customer was, and again, if it's cleared or uncleared. So just, you know, some reports to keep an eye on what's going on, why hasn't this cleared, if things have changed. This is another great report. And then the next one is the journal entry report. So this will show you the date of the journal entry, the general ledger account, description, and the amount. So it'll show you the amount of each line item to your general ledger, and then at the bottom, it'll show you the total amount of the journal entry. And here's our example. So it'll show you the date of the journal entry. If you assigned it a journal entry number, or, you know, PP is what Danable McKee uses for prepaid as of 6/30/25. You can see the description to adjust prepaid to actual. So we're adjusting insurance in this journal entry. So you can see insurance, workers' compensation, and then it shows you the total. So the journal entry report is really cool because it shows you each line that is used, the amount in each line, and then the total amount of the journal entry. And again, if you're, you know, if you normally do journal entry to payroll, and you know that it says these specific things, and then all of a sudden you see this other random journal entry that's hitting payroll, but maybe the date doesn't seem right or the description doesn't seem right, that could be a red flag that something's going on. And then the last report that we love is the audit log. So this report is going to provide the date of the original transaction, the timestamp of the original transaction, the user that completed the task in QuickBooks, and then it will also show the date and timestamp of the transaction if it was edited. So here's, and this is a sample company that we use in QuickBooks, so it doesn't have a ton of detail in it, but you can see that it shows the date and time, the user, and then what they did. So you can see when they signed in, when they signed out, if they, entered their timesheet, if they edited a transaction, if they added a bill, you can see anything. And I don't want to get into too many details about this report today because we're going to go into a lot more details of all the things you can do with it in part 2. But if you're not already using this or you haven't heard of it before, I encourage you to check it out between now and part 2. And then we'll go over a lot of ways to be using this in part 2.
Yeah, it's an amazing report. We're where I talked about changing the payee's name would show up on
Yep.
there. So yeah, this is really gonna be a lot of part two. Really looking forward to that. So that brings us to save the date for part two. It's Wednesday, August 20th, 2025. It's gonna run at the same time, 10 to 11. So in that session, best practices for configuring QuickBooks, fraud prevention in mind with that, how to structure user roles and permissions, utilizing audit trails. This is going to be, key for any owner. If you know any owners that have small businesses and are using QuickBooks, please advise them to jump in on this. Again, my $8.6 million fraud case is because no one did these items at all. That could have been prevented. It's going to be great. We're looking forward to having you guys for part two. Again, so you can view our past seminars on our YouTube page. So here's the QR code, like and subscribe. We're trying to build that as well. Any seminars we do, get up there. So it's great information. Christine did a great QuickBooks tutorial last year that's up there. So if you need help on specific pieces of the QuickBooks, that's going to be a great place. We also have upcoming webinars. So the One Big Beautiful Bill, our tax partners are going through the thousands of pages, and we will be having a seminar once they're completed, but that date has already been committed to. So if you go to our website, dmcpas.com, click on our events tab, you will see all the upcoming webinars. There's also past articles, depending on the industry you're in. So we hope you'll utilize those resources as well. Christine and I are always here to answer any questions. Please feel free to email us. Our information is right there. If we don't know the answer, and a lot of times we might not, there's definitely somebody in this firm who will know the answer, who will get you an answer. So again, we appreciate your time. Please give us the feedback. So as a reminder, take a moment to complete the session evaluation. Your feedback is greatly appreciated. Once complete, simply check out the app on the app. And again, if there's something specific you want to see for part two, we are in the process of completing that. Let us know in the evaluation. We'll make sure we include that in part two. Thanks, everybody. Have a great day.